Good morning all and welcome to today's video. So today I have just the one pair on watch, which is West Texas Oil. I'm running slightly later than usual. I had a webinar to attend this morning as part of the Falcon Trading Guidance community, of which I'm a member. If you're watching on YouTube or you're watching on TradingView, you can find out more about that on via the link on my YouTube profile, on my YouTube channel profile. But without further ado, let's break this pair down for you now. I'm probably going to go a little bit quicker than normal just because I've got a lot to do today in my personal life. So I may not go into quite as much detail as I normally would, he says. Okay, right, let's get into it. So on the higher time frames, we have this high here where we break these lows. Okay, we rally to the upside. We then have this high here. We near miss to that high. Often these near misses get filled. We come back up again. We near miss to that high again. We sell off. We come all the way back up, eventually tap into and break above this high here, which is typically what we see on the higher time frames if we're going to move to the downside. It's not normally just a straightforward double top as many would believe it is. On the higher time frames, more often than not, we break above and wash out the liquidity there before moving to the downside, as opposed to just tapping into it. And you can see that happened here. Okay, so if we just zoom in, you might be thinking, well, why did price come back up? Well, if we zoom out, one of the reasons it may have come back up is because we have this bullish wick, and yes, we did wick through the area and not to it, but when we have these green candles such as this with a wick above them, sometimes price can come back up to fill 70 to 80% of the wick before moving to the downside. You know, full-bodied price action holds much more weight than a wick does, even though in this instance we actually wicked through the area of value. Okay, so that may account for why, you know, it's not for us as traders to understand why, you know, everything about the market. There are always unknown variables, but that would certainly explain why price came back up to fill that wick. So you can see now we are in a run of momentum to the downside. We've had the impulse correction continuation that we typically look for. It's moving in that kind of sequence. We're trading below this high now, below all of this, below these highs. And you can see if we just separate the structures, if I just zoom down a little bit, we have this area here. Price comes up. We get a bit of a FOMO channel there. I'm sure many of the people who started selling here would have actually been looking to sell here, but they start selling early, no doubt out of FOMO. Think about what's going on, the psychology of the market. Many people would have been waiting for this to get all the way up to here, okay? They've remained patient the whole way through, and typically speaking, the higher, the more standout these, the longer that people have had to wait for price to get to an area of value, the more likely it is, in my experience, that you get these FOMO channels, right? Because people wait impatiently, as we say within Falcon. Okay, so the longer someone has had to wait, the more likely it is that they will jump in early when price gets close to the area of value, because they're thinking to themselves, oh my god, price is finally there, you know. Whereas if they haven't had to wait as long, they're more likely to be patient, if that makes sense. If you've not waited a long time for something, you're more likely to remain patient, as opposed to if you've waited a long time, many people will just jump in. And you see evidence of that here. People start to sell it, they get washed out. We then do tap into the area that they were waiting for price to tap into, and then they don't take, you know, if there was a possibility of them getting short from here, they don't take it because they've been psychologically affected by the loss they've taken here. So that's how the market can play games with you, or rather how you play games with yourself if you're not disciplined enough to stick to the rules which you've created for yourself, if you've even created rules at all. But that's another story for another day. Okay, so we move to the downside, we come back up. We then start to see these little, if we just separate the structures here. So this is where it gets a bit more interesting and the psychological patterns become a bit more apparent. So we can kind of separate the structures here. So we have this kind of structure here. We don't necessarily have a first touch as such, but we have that middle section, impulse correction, impulsive move out, which taps above here, taps into some of this. We do slightly near miss to that, which is a factor in my thinking. Okay, price comes down, it leaves a footprint. Okay, what happens? We near miss to that footprint. We near miss to the near miss to the footprint. Then we come back up and we wash out all of these, tap into that, and then move to the downside. However, we have now near missed to this high, which near missed there. So there's always a possibility. Okay, there's always the possibility that we could be seeing a move down to here, right? Which is partly why I've got my arrow there. Then we see that move to the upside like that. Okay, then we tap into the high, and then we take out that low. Okay, because of those near misses up there, we would then have this kind of structure. Okay, and something like that, and then this would become the middle section within that, for that break above to tap into those highs which we near miss to, and then we move to the downside to potentially take out this near miss to here. Okay, so that's a potential. That's how I'm seeing it at the minute. But even if we're only to capitalize, even if we were only to capitalize on a run from here where I've got marked as my area of value, this little footprint, this area of consolidation where there's a bit of a sharp runoff, there is still more than enough profit potential to be made from here to here, even if that was to occur. And it doesn't necessarily mean that price will stop at this area. It could blast straight through. But so long as we can manage risk, that's all that matters. Now, one of the reasons, typically speaking, we would see something like, looking at what's happening now, we would see something like this where price comes down, we form a middle section. You can see we may be near missing that area already, and then we would get something like that, okay, because the market needs to breathe, and that would be volume accumulation for the next leg to the downside. However, that typically occurs after a series of tight flags, right? Because after a series of tight flags, the market would need typically to pull back more deeply to build volume for the next wave. However, if we just analyze how prices move down, so if we analyze the sequence on the way down, you can see that we've moved down from a larger correction into a larger correction. So price has already built volume in here, okay, meaning that it doesn't necessarily need to build as much here for it to move to the downside, which may mean that we just trickle up to this area of value as we have done and form some kind of like a V-shaped pattern before we sell off because of the volume that was accumulated here. And then we would have that kind of that larger correction into this would then, that would be more in keeping with what I would expect to see if this is a middle section to push up to there to then move to the downside. So that all makes sense contextually, okay? And some of this might go right over your head, but when you've been doing this for long enough, you start to see things. And when people say things like, oh, that's a bit subjective, well, as I said in the webinar this morning, if you were to stand next to Ronaldo as he was lining up a free kick and you said to him, right, how hard are you going to kick that ball so that it hits the top corner of the net, right? He would probably say, well, he might say something, be a bit confused by your question and say, not know how to answer it and say, quite hard. And you might go, well, that's a bit subjective. And he'd say something like, no, not if you've got enough experience. With experience, you know how hard to hit it, but it's difficult to explain it to somebody else. Okay, that's called experience. Everything's subjective if you don't know what you're doing. Okay, if you do, then it's not. So what I'll be looking for is the following. Quite straightforward. I'll be looking for a tap into this area, which was the start of this little piece of structure here. So a little bit of volume was built here. And when it was exchanged last time around, it caused a bit of a sharp runoff. What do we know about these little sharp runoffs? If we have another sharp runoff, if we just replicate that price, if we tap into that area again, the runoff will likely, if we do push lower, the first runoff will likely be of a similar level of aggression before we potentially get another correction to push lower. And by that point, my risk would be off the table. So what I'd be looking for today from this pair is the following. I'm looking for price to tap into the sharp hook point where there was volume built and a sharp runoff last time around. And then I'll be looking for a 1 hour push down followed by a 15-minute consolidation. And then I would set an entry on the break of the consolidation while simultaneously looking for a 5-minute risk entry within the structure from the top of it if I could get it. If I didn't get it, didn't manage to get that, I would just let the reduced risk entry order trigger me in. And if I did get it, I would cancel the reduced risk entry order and then look for that and settle for that. I say settle for, it's actually the better entry, but get that risk entry within the flag, which would magnify the risk to reward. And then what I would do in this instance is I would measure the range from there to there. I would set a take profit at the 90% mark, which is typically where price can pull back more deeply. And it wouldn't surprise me, especially with all these near misses up there. That is the sort of area where I wouldn't necessarily just anticipate a steeper pullback. That is also an area where I would anticipate that move to break those highs. Okay, so if we've got near misses to the above price, then price may not get all the way even to here, because it may pull back from there and then take out all these. So that's just a factor in my thinking. So that is West Texas oil. And of course, the market across the board at the moment looks like it just needs a bit more development. It's one of those where you just look at it and most of it you can just write off in seconds. And a lot of it just looks like it would need a bit more time to develop. So a lot of the time, there's just no point in me putting these pairs on watch and breaking them down when they're nowhere near being ready. And even if they were to get to the area of value more quickly than anticipated, if price does get to an area more quickly than anticipated, then it's probably got there too quickly, and we would want to see some kind of deceleration and a change in sentiment before we even considered getting long or short in the other direction, if that makes sense. So if price gets somewhere more quickly than anticipated, then it's probably just got there too quickly, and you need to wait for the market to show its hand. But that is the thought process on West Texas oil. And of course, I have an alert set there to see if we tap into that. This may be a bit of a FOMO leg. Okay. This looks like another bit of a FOMO move. Okay. This is where you can take a lot of losses within here. This may also be, we may also get something like that, which taps into, let's say, for example, there. And then we have that kind of middle section there. Okay. And then we push up, break the high, and then that becomes the near miss to here. We tap into there, and then we look to get short from there. But that would obviously count the candles at the bottom of the screen. That would take a bit longer. But if it takes a bit longer, great. The patience is the name of the game. The more structured these entries are, the better, in my opinion and experience. And with structure comes patience, because you have to wait for the structures to form. But anyway, that is my thought process. Thanks for watching, folks, and I'll see you again in the next video.